Our thesis at this point on the company is that they do have a substantial lead on the EV powertrain, the battery design, and rolling vehicles out to consumers. And the leg higher that we're calling for in the stock is really related to their ability to bring that FSD product into the market. They have enough vehicles to really roll out, about 6 billion test miles per every half year at this point. That's going to accelerate. And we think the real core thesis on Tesla right now is around that data advantage that they have versus peers. So to think about this, about 1 million vehicles on the road versus peers that have a few thousand on the road. And so their ability to test products in shadow mode with their customers in real life situations and really roll out, highly, reliable new products through that platform and do that over the air is unparalleled at this point. And that's really the core of our thesis here, that Tesla is going to be a leader in that level 3 plus ADAS into level 4 over the next couple of years. And that's what's going to get priced into the stock over the next 18 to 24 months.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So today we're hearing from top-ranked analyst Colin Rusch, who believes Tesla stock can gain 50% over the next 12 months to over $1,000 per share, sharing his thoughts on Tesla's record-breaking Q1 production and deliveries, how Biden's EV incentives will or won't affect Tesla and the wider electric vehicle market, and more thoughts on Tesla's approach to autonomy and their full self-driving data lead. So let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. And here we are looking at Colin Rusch's profile on tipranks.com, a phenomenal 5-star rating, a brilliant stock analyst, ranked number 7 out of over 7,000 stock analysts. In other words, Colin is literally in the top 0.1%. How many of you guys and girls watching at home are in the top 0.1% at anything? Exactly. This is a guy whose stock recommendations are probably worth paying a little bit more attention to than, say, the likes of somebody on the other end of the spectrum, like our good mate Gordon Johnson over at GLJ Research, who's currently ranked number 7,161, basically in the bottom 0.1%. So I guess a slow clap for Gordon and an actual clap for Colin. Big difference between these two analysts. I mean, look at this, chalk and cheese. And of course, why would that be? Well, our mate Colin over here has been recommending people either buy or hold Tesla stock since 2013. Meanwhile, Gordon, the genius Johnson, has been advising people to, that's right, you wouldn't believe it, sell Tesla stock since 2018. Good job, Gordon. Anyway, let's get into the video. I just wanted to get this out of the way because it actually matters.
Those record deliveries came despite the chip shortage. So what does that tell you? Does Tesla just have a better grasp of its supply chain? If so, what does that mean for, increasing competition this year?
I think it does. It's also an organizational focus. I think they understood that this was going to be a challenging quarter and really focused their efforts in China and in the U.S. to deliver vehicles into local markets rather than try to emphasize some of the European markets. So I think it's a combination of managing some of these issues a little bit more effectively than some of their peers, the size of the organization, and then really focusing their efforts in the right end markets to actually deliver in the quarter.
Colin, I wonder if what is your full year delivery forecast? Can we put a 9 handle on that? And how do we get to that kind of a number given some of the inventory constraints we're seeing in the chain?
Yeah, we're not calling for that big a number just yet. We're just below 800,000 vehicles for the year at this point. And so that's really not a big stretch for this organization. We've been a little bit conservative around a bunch of the logistics challenges for all of our companies as we entered into this re-ramp, given what we've seen with some of the shipping and as well as some of the component supply. And so, that's certainly within the realm of possibility for this organization, given the capacity at the factories. And really, it's going to depend on how well they manage some of the components and some of their really essential elements like battery supply, as well as IGBTs, MOSFETs, and as well as the chip shortage that everybody's managing right now.
So despite a $1,000+ price target here, Colin Rusch and Oppenheimer being extremely conservative, expecting Tesla at this stage to deliver less than 800,000 vehicles for the full year 2021. Honestly, completely absurd. It's going to be well over this figure, but I understand where they're coming from. The assumption here is that, well, Tesla may be adversely affected by part shortages, supply chain issues, and logistical challenges. And I totally understand this, but we need to think about this a little bit deeper. About a year ago, when everyone thought the world was ending, there was this one company that knew that they had far more demand than they could meet supply for years to come. Tesla. And instead of panicking and freaking out and shutting down production, thinking, oh my God, no one's ever going to buy a vehicle again, Tesla were full steam ahead. So when a lot of other automakers were cancelling orders, saying to suppliers, hey, we don't need those parts, slow it up, ease it up, blah, 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 Tesla, no change, full steam ahead. So of all the companies likely to face part shortages and supply challenges, is it likely to be the company that's built up their own supply chain, their own logistics, and has been full steam ahead for the entire last 12 months? Or is it likely to be the companies that panicked and told their suppliers, hey, we don't want those parts that you were going to give us now, so fuck you. Now, I'm not saying that Tesla won't be affected at all here. I'm just saying I'm highly confident that they'll be able to navigate all these challenges, and they're in an extremely strong position to do so.
Colin, looking on the flip side of those supply questions to the question of demand, how crucial is it that the Biden administration lift its ceiling on these tax credits for EV vehicles going forward?
I don't think it's really crucial for Tesla. At this point, the company has a really substantial lead from a product perspective.
I completely agree. I've said it before and I will say it again. Tesla does not need or benefit from any of these EV incentives. Now, this isn't the case for most other companies out there trying to make electric vehicles. It's just Tesla actually has a compelling product that's so good it sells itself, they don't need help. Most other companies attempting to compete with Tesla with their own electric vehicles, they definitely do need help. So I think a lot of other companies will benefit enormously from these EV incentives. Tesla, it's just icing on the cake. But hey, not going to hurt.
Both from a brand awareness, but also a performance perspective, they've really done a nice job on designing the powertrain, trying to evolve the actual offering for consumers and being able to deliver vehicles. It's actually quite difficult to make these EVs, and we're seeing that really play out with a lot of these other platforms as they struggle to really hit the timeframes that they've set out for themselves. So for us, the Biden administration for Tesla is a nice to have, not a need to have. We do think that certainly is the Biden proposal is beneficial to sentiment. It's also going to support a lot of the infrastructure build out, from a charging perspective, as well as some of the other ease of doing business for a lot of that infrastructure that's going to support the rollout of vehicles. So it certainly would help Tesla, but it's certainly not embedded in our numbers at this point.
Right, and Colin, last question for you. I'd love to hear your thoughts on Tesla's FSD full self-driving feature, currently priced around $10,000. What do you think it's worth? Is it going to be a revenue contributor this year?
Yeah, absolutely. So, our thesis at this point on the company is that they do have a substantial lead on the EV powertrain, the battery design, and rolling vehicles out to consumers. And the leg higher that we're calling for in the stock is really related to their ability to bring that FSD product into the market. They have enough vehicles to really roll out, about 6 billion test miles per every half year at this point. That's going to accelerate. And we think the real core thesis on Tesla right now is around that data advantage that they have versus peers. So to think about this, about 1 million vehicles on the road versus peers that have a few thousand on the road. And so their ability to test products in shadow mode with their customers in real life situations and really roll out, highly, reliable new products through that platform and do that over the air is unparalleled at this point. And that's really the core of our thesis here, that Tesla is going to be a leader in that level 3 plus ADAS into level 4 over the next couple of years. And that's what's going to get priced into the stock over the next 18 to 24 months.
Once again, I'm in complete agreement here. I think over the next 12, 18, 24 months, the wider marketplace heavily prices autonomy into Tesla stock as it becomes bleedingly obvious to everyone that they've won the race to solve autonomy. First, the full self-driving beta release, then the release expands. Next minute, it gets widely released to the entire fleet. Next minute, it's no longer beta. Next minute, we have a wide release of full self-driving software. Next minute, Tesla starts deploying robo-taxis in some areas. Next minute, they deploy them in more areas. Next minute, everyone realizes they've won the race. Next minute, Tesla stock to the fucking moon. At least, that's how I see it playing out. So we're now going to look at some more of the mainstream finance media's reaction to Tesla's record-breaking Q1 production and delivery numbers. Just a quick note. Make sure your FUD detector is activated as you watch these clips.
Shares of Tesla are higher on record first quarter deliveries, which soared past Wall Street estimates. The electric car maker delivering nearly 185,000 cars globally versus about the 178,000 expected, according to Refinitiv.
Wait, what? Where is Refinitiv getting their so-called numbers from? I just 178,000 consensus estimate. Hardly anyone on Wall Street was even at 175,000 total. What the? I mean, the consensus estimate from FactSet was like 162,000 deliveries, which is generally what I rely on. But anyway, whatever. I don't care. Maybe it's an accident. Maybe it's intentional FUD. The impression here is that Tesla beat deliveries by a tiny bit when in fact they beat them by an enormous margin. But hey, whatever. Let's move on.
For more on Tesla's blowout sales and the future of EVs, let's bring in Tim Higgins, auto and tech reporter for the Wall Street Journal and a CNBC contributor. Auto reporter Phil LeBeau joining us as well. Tim, the market is cheering these numbers. The stock is up. We have Wedbush Securities upgrading shares to an outperform with a price target of $1,000. I mean, how significant are these delivery numbers?
Well, it's a big win, in part because the first quarter has traditionally been a tough one, the weakest one for Tesla, and they have a long history of really disappointing. And when you look at the Tesla stock, it's really about growth, the growth story, and there's so much attention to it that, in the last few months, there've been a lot of people looking for signs that maybe that growth story had hit some bumps. And so coming out of the quarter with such a huge number will kind of reassure investors for the rest of the year that potentially those huge growth targets that Elon Musk is targeting are potentially going to happen.
Yeah, Phil, the fact that these record delivery numbers are coming in the face of chip shortages, which we know have really challenged the auto sector. What do you make of it?
Two things that Tesla did correctly in this quarter when you look at the first quarter, Seema. First of all, you mentioned the chip shortage. They had to weather this. They had a little bit of an impact in terms of production out in California, but not nearly to the extent that we've seen from other automakers. And the second move that they made was to de-emphasize building the Model S and the Model X. Now, those are not huge volumes relative to the Model 3 and Model Y, but Tesla correctly said, look, let's emphasize the Model 3 and the Model Y, especially in China, which is the world's largest market for electric vehicles. Those are two reasons why Tesla was able to do better than expected when it comes to deliveries in the first quarter.
Tim, we've been looking through this Biden's infrastructure package proposed last week and trying to figure out what it means for the electric car industry. Your thoughts on how big of a boon this could be for Tesla and its competitors?
Well, anytime that you should get more charging stations, that would be helpful for any electric car company. Tesla, part of the reason that they have built such a loyal base out there is because they have these supercharger network around the country where it's easy for somebody to kind of top up the charge if they need it. Though most people use their home charger to fill these cars. So anytime you can get that infrastructure out there and they don't have to pay for it, that's probably a good thing. That also helps build interest in electric cars, which helps them as well.
As I've mentioned previously, the EV incentives of no use whatsoever to Tesla. Maybe indirectly they'll create some more interest or awareness about electric vehicles. Then people look into EVs, do some homework and realize Tesla is the only game in town. But I do want to be clear, the EV incentives will dramatically help other companies trying to compete with Tesla. Not enough for them to actually get into a dominant position, but certainly it will help. Imagine being another automotive manufacturer who hasn't built out your own supercharging network because you didn't have a brain, you didn't realize EVs are the future, and now not only do you need to transition to EVs, but you also need to build out your charging network. Well, it's a hell of a lot easier if Biden will build them for you, so to speak. Around 500,000 EV charging stations have been proposed. That's not going to help Tesla owners really whatsoever. Why? Because Tesla's already built out a sufficient supercharging network and continues to scale as needed. But this is going to be a big leg up to many other companies who have many other things to worry about besides building somewhere for their customers to actually charge their EVs once they actually can produce them at volume. Hope you guys have enjoyed this video. It's kind of funny to me to see Colin Rusch, a massive Tesla bull. Remember, he's expecting the stock to gain 50+% over the next 12 months to reach $1,036 per share. Actually quite bearish on Tesla's 2021 deliveries. But that should tell you a lot. Colin is smart enough to realize that Tesla's year-on-year, quarter-over-quarter deliveries don't matter as much as the long-term trend, and of course, the killer piece of the puzzle, autonomy. Let me know in the comments below if you think Tesla stock will reach over $1,000 per share this year, and if so, when? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.